Hey everyone, and welcome back to Chip Stock Investor. It's Nick and Casey, and we're talking about Wolfspeed today.
Hey everyone. Yeah, Wolfspeed.
It's a mess out there.
It's a mess. Sponsor of today's video, Fiscal.ai. Great visuals, great platform for researching a business. We used it actually pretty thoroughly, especially the last year, taking a deep dive into Wolfspeed and trying to figure out what's wrong. 15% off using the link below, a paid plan. Pair it with the semi-insider platform that we're building out. And you got yourself a pretty powerful tool set for analyzing businesses. Check it out. In the next couple of weeks, we're going to be talking about our small bets, revamped portfolio. Will Wolfspeed finally get added to those small bets? We'll talk about that.
We don't need to go back to the very beginning. You can catch some of our videos on Wolfspeed. We'll make sure that we link those here in the video description. But Nick, how did Wolfspeed get to this point?
It's not been good. So you probably know we've talked about Wolfspeed, especially in the last 2 years, in not so great a light. Talked about the deteriorating financials. Wolfspeed is an IDM, integrated device manufacturer, that focused on silicon carbide production, which was a pretty hot theme, especially in the aftermath of lockdowns and the pandemic and all of that. Auto sales were quite high, and especially electric vehicles, EVs, and silicon carbide, key ingredient there. But things started to deteriorate for Wolfspeed as the chip shortage turned into chip oversupply, including for silicon carbide. And it's all culminated in this. They officially declared bankruptcy just a couple of days ago. Hopefully no surprise to everybody here. We've kept everybody up to date on what's going on. And here's what they're working on now with their creditors. This is an outline of how they're going to be reorganizing the debt, predominantly with Apollo Group, the global alternative asset manager, and Renesas, a fellow IDM in Japan. They have a silicon carbide raw wafer agreement with Wolfspeed. They had lent them a couple $2 billion. So what's going to be happening here is Wolfspeed will get a 70% reduction in total debt, which will obviously reduce their interest expense and that future liability of having to pay that debt back. So that sounds good, except in a bankruptcy, this is where you need to know about capital structure and how capital structure of a business works, right?
Yeah, existing equity holders receive 3 or 5% of the new common equity. So pennies on the dollar for those who are invested.
And that's after like the 95%, 97% decline in the stock price over the last couple of years.
If a company runs out of money and can't pay the bills, the creditors or investors that own the debt, in this case, primarily Apollo and Renesas, when they're restructuring, they're going to get paid first. Those two companies are going to have to write off a significant sum of money, but they're going to do that in the hopes that maybe later on there's some payback there and they get some of their money back. But if there's anything left over after that initial restructuring, that just leaves everybody else with just maybe 3 to 5 cents in this case.
Yeah, which is why we said you need to avoid the stock. Even at the beginning of this year, when Wolfspeed had fallen all the way to like $5 a share, it was pretty clear it was headed for not good things. So here's the quarterly trend. You can see things continued to deteriorate over the last couple of quarters. In March, their last reported quarter, over $6.5 billion in debt, pictured there in red. On that press release we showed you, they said cash, it appears, continued to deteriorate a little bit further over the last couple of months. That's because free cash flow continues to be negative, but debt, as of that update, was about $1.3 billion. So what this is going to look like here after they get this restructured by the end of the summer is Wolfspeed will still have approximately $2 billion in debt remaining that they'll owe Apollo and Renesas. However, they think that because the market is recovering for automotive, they'll get their way back to free cash flow break even sooner than later. So all of these debt holders now, Apollo and Renesas, basically are going to own the equity in the company. If you happen to still own Wolf stock, unfortunately, you've been wiped out. You'll still have 3 to 5 cents on the dollar, as Casey said. So at this point, though, if Wolfspeed can claw their way back to that free cash flow break even, that's the little purple bar there, net interest expense is going to probably get cut down to like maybe a much more manageable 20 million-ish per quarter by the time this is said and done, maybe a bit less. Maybe Wolfspeed stock is a buy. Maybe this is a great turnaround story in the making. For us personally, though, I mean, I don't think we would be interested in betting on this until we know for sure that the debt restructure has been agreed upon. It's finished. Basically, let's let the dust settle first. But the good news here is Wolfspeed is going to emerge, it appears, from bankruptcy still solvent, albeit hacked down in size quite a bit from where they were at the peak, and definitely right-sizing their very ambitious plans that they had before in the silicon carbide market. But maybe now this is an actually viable business, so we're still going to continue to monitor Wolfspeed as they finalize this deal with Apollo and Renesas and some of the other creditors.